Okay, everyone, Peter Campbell's with us. Peter's Twitter handle is MCM_CT. So, Peter, I'm going to pass you the ball, just like the World Cup here, and make you the presenter. I want to thank you in advance for taking the time to address our community in F.A.C.E today. So you'll have the opportunity to share your screen, and looking forward to hearing your voice and seeing what's on your radar. Hi, how are you, Peter? Can you hear me?
Hey, Dale, how are you? Nice to be with you guys today. Can you hear me?
Yeah, I can hear you clearly, Peter. Great for you to take some time out of the slow trading day to be with us.
Yeah.
You know, summer's over.
Yeah, it's before 9:30. So for me, that's slow trading, because I generally trade the US. So although I focus a lot on currencies, and you guys are talking about the dollar, and I have some interesting charts to share with you guys on the dollar.
Okay, but before we get there, you know, I'm always interested in how someone ends up in this industry and becomes a trader. Can you just give us a little overview of what brought you into this, maybe what you were doing before, and who was an influence over you to get to where you are now?
Yeah, well, I would say I grew up as a classical musician. So I went to I studied at Juilliard and at Manhattan School of Music.
Wow.
And I did a lot of my majors were piano and composition. And believe it or not, whenever being a pianist isn't really a great thing for trading, but being a composer is an amazing thing for trading, because what I've found in my work as a composer is that people generally want harmony in their lives, and this is something that they want harmony. They search for harmony. They search for example, profits, and in composition, you don't have harmony unless you have the dissonance. In fact, creating a resolution, a place of resolution, a place where a direction can be sort of resolved and reach a stopping point, happens only because of a little thing called chaos, which is called dissonance. So creating, accepting and working with dissonance and also rhythm was a big part of my work. And I ended up leaving. I did a lot of film scoring and TV commercials and stuff like that, and it just became overwhelming process for me, because I didn't go to school to become a musician that lost my ability to be a musician. I wanted to be honest with my craft, and what I felt was when I was getting paid by all these people to write music, I lost my ability to compose for myself.
You were being commercialized.
Yeah. So I tried to compose for about a year, and I couldn't come up with anything, and I decided, okay, well, you know, all this new media stuff looks great, and film scoring, you know, I don't need to do that. I'd like to do something that's less emotional for me and more intellectual. And so I started getting into special effects and film production. And the interesting reason that happened was because I had been doing a lot of media work, which was involved with Todd Rundgren and other stuff, where we were combining sort of dynamic nonlinear content in terms of sound with also video and animation and 3D. And me as a programmer, it sort of came out of it. That's my primary work, actually, is when I was composing, I was in the recording studio all the time and doing film scoring work. It's very, very advanced. It's a very difficult job. And so inevitably you need to, you need to do things that the software that you have, or at least in those days, couldn't do. So I started writing my own tools. And that's how I got into programming. And what I ended up finding out as I did that was that in order to manipulate sounds in order to manipulate the content that I wanted to manipulate, trying to do things very perfectly was actually a contradiction in terms, because what people notice in nature is imperfection. They look for imperfection. What they seek is perfection. And so what I found in my work in terms of special effects, in terms of working with imagery, was that I had to harmonize with the imperfections of the artwork that I was working on, and then that would create a really believable result. And this was a huge point of evolution for me, because it's actually the noise that screws people up. And the same thing can be applied in trading. When people try to photo retouch, for example, or they try to composite images, or they try to create special effects, one of the things they don't do is try to understand what's going on in the substructure of what they're putting together. And in the end, oftentimes you get pretty crappy results.
So are you dealing more with, Peter, are you dealing more with imperfection in the markets than perfection? Because I have an expression,
yeah.
I have an expression that it's don't expect perfection at the crap table, which is, you know, what the markets are. Now, I'm sure you find, you know, rhythm and harmony. I mean, there's actually something called harmonics that people use in the market. So, you know, everything's math, isn't music math too? And tell us what the similarities between music and trading that you've discovered.
Well, the biggest similarities that I found, and this is how this all works, is that firstly, you know, for me, I found that understanding how to handle noise, your approach or your algorithm or your process, is absolutely integral to being successful. Because, you know, when you're trading, you can't be perfect. You can't be precise. You need to be thematically correct. And in order to become more precise, you need to actually be able to dissect what is your content, what is the signal, and what is the noise. And then you can abstract the two to get out from each other. And so what I figured and what I learned from every area that I ever did any work on is that that theme applies throughout sound, music, and markets. And ironically, I had a lot of algorithm work for, you know, for manipulating sounds, and I was looking to learn more, and I was also doing the same thing, similar algorithms for visual content. And this was when Photoshop was really, really early. So I was writing Photoshop filters and stuff like that. And in those days, there wasn't like support like there is now. And ironically, JP Morgan picked me out of a forum and said, you know, your algorithm work is more advanced than ours. Can you come in and talk to us? And bang, and I ended up on Wall Street because they thought that my work would be relevant in derivatives. And so that's the long answer to how I ended up on Wall Street.
It's a great answer. And you're the first trained musician, composer I've ever talked to that's made the transition to trading. So I find it fascinating. So you say you have some views that you want to share with us in the dollar and the S&P. Let's talk about what you have up here on your setup, the different colored dotted lines.
Yeah, I just want to add one more thing because I think it's really.
It's your interview.
Yeah, the theme what I've learned is that the most predictable things feel like the most unpredictable, and that's been in every aspect that I've had to apply any sort of scientific study. And that's not saying that things can't become more unpredictable when they feel unpredictable. But the fact is that if you can come up with sort of a set of coherent rules, chaos is very predictable. What's not predictable is consonance, something that is resolved and harmonic in terms of I'm not talking about a harmonic in terms of fib ratio. I'm talking about in terms of being even and, you know, consonant sort of. That's not predictable. You don't have any information in there. But when you have a chaos, it becomes very predictable. So I wrote a bunch of tools to actually help deal with the idea of what the central banks markets, because what they're doing essentially is creating consonants. They're creating a very smooth market, and they have done that for a very long period of time. And so there's very little information in the market. If you go to a very short time frame, maybe you can find, you know, more dynamic information, but on a lot of levels, you just don't get very much information out of the market. And it is the reason that so many hedge funds have had really difficult time getting performance, is because the diversity of activity that normally happens in the market has become very consonant. It's become self-reinforcing, and everything does the same thing. And then within those things, volatility is suppressed, or it was suppressed. I don't believe that's going to continue. Yeah, it's still suppressed compared to normal, but I don't think that's going to continue, because I think that the one thing that is predictable about something that is very static or smooth is that it will become very not smooth. It's not a question of that will happen. But anyway, the other aspect that I think I learned from my experience as a composer was a respect for nature, and and also as working with imagery, is I learned that nature has its sort of natural fractals that are very organic, that you really have to respect them, and they definitely apply in markets. So rhythm and timing are huge elements for me in my work. In the chart that we're looking at here, it's kind of interesting, because what you're seeing is the S&P. The primary one I want to look at is the S&P. Okay. Because I don't know if you can see my mouse. Can you see my mouse moving around?
Yes. See the cursor.
Okay. Basically over here, you can see we have some little green dots at the bottom of this chart. These are basically areas in which I would expect a bounce, for example. They occurred here as well. These areas are I would expect a reversion back down. But the interesting part of this chart is the cycles. And this is sort of a timing mechanism where I'm backing out the sine wave oscillation in the markets, as it were. So I'm looking at what is the waves cresting in the market, and when do those waves break unexpectedly. And so when the waves break unexpectedly, you get an impulse, which is this line over here, you see. So every time we get a magenta line, basically it's like a wave, a ripple on a pond. Essentially, energy. The energy is not moving in terms of direction. What it's moving in terms of oscillation. So we're oscillating, and then when the wave crests, it falls back down. So now what happens in nature is that when you get multiple waves coming together, for example, instead of at this line, this being a crest where the wave proceeds back down, you might have several waves come together and all of a sudden blast this wave out. And all of a sudden we're up here in the market. Now that would become an impulse, because we've now taken a tremendous amount of energy and overwhelmed what would be a cyclic oscillation. And so that's what happened here. We had a very, very big impulsive cycle. And that was basically a bunch of different energy waves coming together and forcing a breakout over here in September last year. You don't see it on this chart, but that's okay. I have another one where you can. And that creates an impulse wave. Now, what happens in an impulse wave is after the impulse wave, you need a crashing floor wave. So you have this huge wave that transports water, as it were, or transport prices, as it were, and that's exactly what happened here. And then you have, okay, this wave has to resolve itself. Now, how does it do that? It crashes to shore and dissipates. So the process of dissipation means that each wave becomes a smaller wave. So as the energy gets basically transmuted. What would be the word? Well, as it changes, as it's coming into a different form, landing on the sand, all that energy is broken down and turned into dissipation energy. So I think of markets in terms of energy, and so here we have impulsive energy, and here, so a full impulse is basically a situation where you have a breakout over an oscillating cycle, and then where you complete that with an oscillation. So you have, this is no longer oscillating, this is a breakout, this is an impulse, and in order to finish an impulse, you need to have an oscillation. So then we have one oscillation over here, and that now creates the end of an impulse. Now the next thing that usually happens is you get dissipation, and so you see we get the second and third end. This is actually a fourth end, and today we're getting a fifth end. Now this is an old chart. This is actually something on a server somewhere. You can see on MCM here, I don't have it labeled as fourth end and fifth end because I've never seen them before. So I actually don't. I have the ability to do it. I just turn it off at 3. So recently I've had to turn it on so that we track basically up to 6 or 7 cyclic oscillations after an impulse. And the reason is because this impulse was, I think, the biggest impulse I've ever seen. It was the most outrageous blow-off, commodity-style blow-off in a stock market, and that is not supposed to happen. And the amount of energy required to dissipate that now is beyond a normal third end or even a fourth end. It's a fifth end. And so what we've done now is basically dissipated all the energy of all the people who invested themselves in this and still think that something is going on. So people from this cycle expended an awful lot of energy. They lost a lot of money in this process, but then they believed it's still happening. And that's sort of the same kind of activity. It's an energy. Basically, the way I look at it, energy, and energy sort of follows the same form, whether it's ocean waves or ripples on a pond. They have a sort of similar connectivity. And, then I wrote this thing here. This is interesting because what I want to do is gauge how compact the energy is, the cycle, the sub-cycles are. And so this is a subdivision of the oscillation that I do in the market. And so when we go to the top of this oscillator, as it were, and all of these little 5 bands become very tight, then the market is wound pretty tight and ready to do something. And usually it means that it's going to consolidate or pull back if we're up at the top, and it usually means that we're going to bounce, for example, right here if we're at the bottom. Now, as you can see, these cycles are pretty prescient. They caught here, the market was so fast that it didn't catch the low very close. Normally it could. I have other versions that do, but basically this is where the cycle crested here. This is where the wave crested. We got a bounce here, it crested again. We got a pullback here, we crested again. We got a bounce, another bounce, a cresting, and then we got this bounce. Now, I think personally, this is just conjecture, and this is just my opinion, and my opinion was wrong over here. So basically, this is a fourth end, and I had a beautiful set of longs through here into the fourth end, and then a bunch of shorts all the way down right into the lows. I covered down at 27.13. If anybody follows on Twitter, then you can recall that there was a lot of emotional energy there, and that's around about where I covered. But the thing is after a fourth end, the normal situation is that I would was conjecture on my part because I've never seen a fifth end on a daily chart. Basically, you would bounce, not exceed this high, and then continue, and then create an impulse. So basically, you see this blue line. If we were to have bounced just to here and then broken that line, we would have created these transport waves. It would have been an impulsive wave down. And that is what I thought would happen, and I think that's most likely to happen out of this fifth wave. So I think that the inflection point we're at right now is pretty large. Now, I'm going to show you guys something else. Where is it here? Because this goes with that. Sorry, it's me. Come on. I posted these charts on.
You want to get to we're starting to run a little bit low on time. Would you like to get to some forecasts of what you're saying?
Yeah, that's what I'm doing right now. Basically, come on. This chart's taking a while to come up here. Come on. Why is Twitter so slow? This is a great chart. This is a geometrics chart when it comes up. There it is. Okay. Now, what you notice is, coming from my background as a musician, I use all sorts of different timing, and each one of these yellow dots is what I call geometric Lucas timing. And then these towers are stress towers. So we got a big stress tower at the high on the S&P 500, and we got what's called stress level overshoots here that broke out over the sort of geometrical squares, and that is a very significant event. Now, sometimes we'll get another bounce and get another tower like we did over here, but either way, we're at major timing for top within this square, within a turn, and that drops into basically the end of the month if we're gonna drop. And then what I do is
could we rally one more time to your upper green dotted line, 2830-ish?
Yeah, I think
that line.
I definitely think that's possible. As you can see, we're into some pretty significant support here.
Mm-hmm.
So if we were to break down below 2790, or we were to break down below 2785, I think that the market's done. But if we hold that support, then we may get one more push up, which would get a tower situation going, stress tower like this, similar here, and then that would lead to a very significant drop. Personally, getting the weekly cycle, getting the daily fifth end cycle, like I showed earlier, is a very significant event. And it's significant for a number of reasons, because if the market breaks out over that, over the cycle we get this month, then counter to everything that most people might feel, we could get a huge ramp in the market. I don't believe that's likely. I think that, and I think the market will pull back much further and then consolidate, go higher. Let me show you a few other charts I think that are interesting about the dollar, for example. This chart I posted earlier, you guys probably have seen this. These are some symmetry plus the fourth end, and then here we'll get the fifth end probably today. This is on the S&P cash. So at the end of the day, we'll probably get a fifth end on there. Now here's the dollar. Now this is cycle analysis on the dollar. And I think this is really interesting because this is multifractal cycle analysis, different time frames. And basically, the dollar made a complete impulse down to an end, and then it's doing something where normally we would have a resistance cycle here, drop and get a second end, and then go up. But we've gotten a complete impulse down, and now we broke out over this cycle. So this is very bullish. As long as we stay over 90, let me see if I can zoom in here. Basically 98.84, as long as we can stay above there.
93.84?
93.84, sorry.
Okay.
Thank you for correcting me on that. Obviously, I'm old. Well, my glasses.
You know, what's 500 points?
Yeah, exactly. But if this is an impulse, then we're going to exceed the previous highs.
Okay.
Now, why do I think that's likely? Well, because when we look at what's going on the dollar, we have on the quarterly chart and on the monthly chart very important cycles. So you can see here was a support cycle, generated a huge move. Here's another support cycle, huge move. Here's another support cycle. We have successfully held that cycle combined with what's called a bullish retracement cycle. So this bullish retracement cycle means we have a lot. We're probably going to go at least in the next move to exceed the previous high from 2000 and let's see, 103, wherever that
Right.
is. And very likely quite a bit further. And so, you know, the dollar setup is a very interesting setup. And another reason that that I like this setup is because when you look at, you know, as I go through, this is the shortest time frame, this is the next shortest, this is the next shortest, and that's the quarterly. We're in a confirmed impulse here on the upside at basically around 92. We broke out, and that impulse holds, and you know, you've got quite a bit of work to do to unwind this. And so if you look at it on this time frame, we're going to need at least second ends to unwind this impulse. That means that we have probably another month to 2 months before we even get through with this daily impulse. And then we still have to unwind this impulse, which that's going to mean 4 or 5 months. And then we've got to deal with this cycle, and we can just look at these ones, and they're generally, you know, 6-8 month cycles. And then we've got these quarterly cycles, which is basically pointing out about 2 years. So it looks like about 1.5 years minimum to me of dollar rally.
Okay.
And I think
that's a big call.
Yeah.
Okay. All right. Well, I really appreciate you sharing your intricate and very insightful views, and you're sharing your algos and your methods with us that some people may have an interest in wanting to follow through on this and get to know you better. Would you like to show your blog now, Peter, and how people could find you?
Yeah, you can find me where I was on Twitter over here. You can find us on Twitter, MCMCT, and MCM_CT, and MCM-CT.com.
Okay.
Now, so you guys know, you know, I'm what I do for a living. I write software, and I run money. So, so what I do when I'm sharing on my Twitter feed is the results of my work. I don't charge for it. It's not my focus to.
Are you a registered investment advisor? You have a hedge fund. How do you run money?
I run managed accounts as a CTA.
Okay. Okay, cool. And what's your minimum?
$2.5 million, and that's should be about 10 million probably, because I don't you know, I write trading systems, and the trading systems use a law of large numbers basis, which means that for me to extract noise from the market and deal with imperfection, I want to take many shots on goal. So I will, you know, build a position with maybe 100, 200 orders, and I'll get out of a position with 1,000 orders, for example. And that creates a high level of fidelity and accuracy at the same time as it creates extremely high friction with the market. And so the higher the amount of money I'm running with those systems, the higher the fidelity and the smoother the performance. So I'm probably raising the minimums up to that.
Okay, well, nice to know some of the 1%ers that could open with 12 million.
Well, it's mostly
institutional. Free. Yeah.
Yes.
All right. Well, I tell you, it's a pleasure meeting you, and I think that I hope you still enjoy playing music, and it's a great outlet. I'm a singer, And
Yeah.
I love music, and I hope you don't give it up, because
No,
you know,
no.
the markets may fill up our wallets, but music nurtures our soul.
It does, and I think, you know, people don't realize how much music can affect your,
Mood
like,
and
everything
health.
is an input. Yeah,
Right.
and when, you know, you get, when, like, I listen to a lot of music. I did a lot of rock and roll production because I did commercials.
Cool.
I did this project Michelob Light Up the Night a long time ago.
Nice.
That was a huge campaign,
Yeah.
and we worked with everybody. It was fun, but
Yeah.
but when I want to grow or learn or evolve, I listen to stuff like Mozart Requiem or a lot of Bach. It's amazing, the mathematics in there, and it's amazing how when you listen to that stuff, it actually affects you psychologically, positively in other
Yeah.
areas of your life. I agree with you.
All right, great meeting you, Peter, and I wish you all the success in the world. I appreciate you taking time out to show us your stuff, and I hope that pips and dollars rain down on you this summer trading season. Good hunting, my trading. You're now my trading warrior brother, buddy.
Yeah, thank you. Well, I look forward to coming back and visiting with you guys in the future.
Thanks so much, Peter. So everyone, you could follow Peter Campbell at MCM_CT. Everyone have a good turnaround Tuesday. I'm taking an ice crack trade at this 1230 level in gold, risking 10. We'll see what happens. Good hunting, and most of all, remember, don't just count your pips, count your blessings. See everyone tomorrow. Adios. Thanks again, Peter.
Okay, thank you.